Good evening, all. Ira Epstein of Linn & Associates with your Spider ETF wrap-up for one wild trading week. I don't know what else to call it, but it is. And today is Thursday, September 23rd, 2021. We're just after 5:55 p.m. Central Time. By the way, it's autumn. We're going to change our time in Chicago off of the Daylight Savings Time, the Central Time, I think next week or so. No, I think it's November. I think it's the first week of November. Autumn just happened. But 2 weeks. I'm not far off. Okay, let's talk about the exposures for the weekend because I think they're important. Will we get contagion if something negative happens with Evergrande, the property developer in China? That's the big event that I'm seeing. They missed another payment today that as of me recording these, maybe there's something on the news later, but when I got to the front of the camera, it wasn't that way. There's another set of payments due on Monday. I think it's Monday. The Chinese government told them not to miss these payments. They missed them. Are they headed for default? They could be, but remember, you can miss payments. You have 30 days to make them good under these contracts, and after that, the default process begins. I told you that yesterday the Chinese government had told local governments, get ready, this company may go under. And now the company, I think, has just flaunted it right back to the Chinese government. Since you're telling them we're going to go under, we don't have the money. Maybe that's what they did. Just hurry the process up, whatever's going to happen. I don't know the games that are going on, the bluff poker that's going on there, and nor do you. You might think you do, you don't. The market to watch, to give you a clue, is copper. They call it the canary in the mine for a reason. It's used in everything, especially when you're building apartments, homes, whatever this company builds for the people. Watch that. And there's so many people involved that the Chinese government can try to brush it off. There's no way to do it. Now, I don't know if it's a Lehman Brothers moment, any factor. I don't see exposure in U.S. banks to it. You know, I told you BlackRock has exposure, UBS and HSBC, but that's about it. I don't know much more than that. So we are interesting in America. What happened today? We saw interest rates shoot up again. Take a look at your 10-year note. Went up, 3-4 basis points. A big move today. The curve yield is flattened out. The short-term end's coming up. The back end sort of sitting, but it's another move. What did the stock market do? Well, we'll talk about that in a minute. When you get high interest rates, the thinking is, especially because rates in the U.S. are going up, is that bullish or bearish the economy? Well, the first thing you get nervous is that going to choke off the economy. That's the logical thought. However, yesterday the Fed told the market that the reason tapering's ready to go is because the economy is strong enough now to do it. So does it matter if interest rates go up? Probably not. And with that, the stock market roared today. That's my view on what occurred. Do you have exposure over the weekend on this roar? Plenty because of China. Plenty because interest rates went up, and plenty because as the rates went up, the dollar went down. But could that dollar down, the yen down today, the markets that were the safe havens, just be the dumping of them? It's very possible. And the interest rate move is not out of any range that isn't norm. So bringing you up to what's going on. Microsoft filled the gap that it had in here, and it's just sort of sitting at this point. If you take a look at the recent days, you got the higher high, the lower low. You stepped out of this, and it's so often the case. You had a market that was in a downtrend, and when it ends by taking out a prior high, you can say that the market's made a trading bottom low. Those are the things that you start looking at. Well, the market came down for a lower low, and then it's just come back into the center. So we have nothing going on. We're not in this big trend down. In fact, we don't have a trend. We have a higher high and lower low. Everybody that's tried to trade has probably been hurt recently, other than the investor in it. But the real story is it's just sitting here at the 18-day average of closes, not moving one way, much or other. I wanted to bring it up. I don't know how long I'll keep this as our lead chart, but I wanted to show you because it brings into play everything. Look at the upper Bollinger Band, the lower. This market's paying attention. It's just going sideways within the bands, hanging around the 18-day average. Momentum is flat. Now in Apple, we still have the pattern of lower highs, lower lows. You had one shot if you're a bear to really ring the bell. What do you do the first time you hit a Bollinger Band that you haven't recently hit? And I know the average guy, I did it years ago. Well, we haven't gotten through those numbers. Boy, that's it. There's the breakout to the downside. But here comes Ira saying, no, that's where you cover shorts. If you're short this market, that's where you yank them in. Why? Because the odds are that 95% of the time you won't stay under that band. And now the market comes back and gives you that bounce and no longer oversold. It's not in an uptrend. I'm not saying that. I'm saying that's what occurred. ARK. ARK is sort of like Microsoft in a bigger way, just sweeping back and forth in here, really not doing a heck of a lot recently. It peaked out back over here. It peaked out in August. It's had several breaks into these 115 zone. It holds. It's not exciting to trade. XLI, the industrial sector, I think all shorts were covered here. No, I think the pros covered 50% of their shorts right in this whole range between here down to here. I think they're still short. No. What did you do today? Every day you've had both numbers under 20. What happened today on the close? Got a reading over 21. I think the shorts are gone. I don't care if it drops back down to these lows. I think they got out and called it a day today. What about the semiconductors? Well, you're caught between the lower and upper bands. I've been telling you, you couldn't make me get short semiconductors with everything I've read. Why? There's a shortage of them. They have pricing power as a company, and that shortage cannot be remedied anytime in the near future. That doesn't sound like a commodity, and that's what it is at the end of the day, a commodity that I want to be short. I've been a commodity trader my whole adult life. In CNBS, the cannabis, you finally did what we thought. You got up to that 18-day average, and now the battle begins. What do you have? I can't answer it. You got a lower low, higher high. We just wait, and we're going to see what this market wants to do. In the housing stocks, they're still oversold and in a downtrend. Interest rates are climbing. The market may not like to hear that in the near term. There's no reason to be a buyer, and I don't see a reason to be short in an oversold condition. In XLE, do you think this is a trend? Follow me, my friends. Here's the panic. This is Friday. This is Monday's panic. Ira was here with you saying, I think the pros are coming out there. And up here, I said to you, these tapes are out there on YouTube. It's not a track record. When they hit the Bollinger Band, if I don't say this, I made a mistake. That's where I think the pros came out. You're overbought. The market heads down. Hit the lower band. I think the pros are coming out. You're oversold. And boy, that has been the best advice. You're back up to the Bollinger Band. You're not certainly trending. And that's where I think the market's going to get another failure up here and head back down. I am not a bear. I am not a bull on this chart. You have higher highs, lower lows. I don't know how to trade something like that. In the emerging markets, I can count on it. Bloomberg's going to start asking me some questions. They'll ask them to me over the weekend and for their TikTok. And I already know they're going to talk to me. They got to be asking me about emerging markets. I've been writing about it. I told traders that I think down here might have been the culmination of this break to be bearish on them. That's what I said. So I'll be surprised if I'm not asked. We'll see what they tell me. You'll have to listen to TikTok to see what I do. In GLD, lower highs, lower lows, headed down, oversold, back to the Bollinger Band. You know I hate gold right here. When it's time to buy it, I will tell you what I'm seeing. This market's been a failure market, a complete failure. It's all through here that the failure happened. Futures the same way, and I've been very clear. It's not the place to be. I don't know how low it wants to go, but gold stinks. GDX, if gold's no good, I don't care what's in the ground right now. and it's coming down with you. By the way, the miners, the general miners, XME, they're not acting this way. TLT, higher high, lower low. You're back under the 18-day average. What happened? Look at how strong you looked yesterday. My gosh. But if you weren't following me, when you're up to that Bollinger Band, I say, you're coming out. You're not embedded. I think people are dumping. I actually think they dumped everything back here and here. When it came down, the opportunity was here. You shouldn't even be in for that rally, and this is what happened. That's what I think. Doesn't mean I'm right. FXE. Now, if you start taking out 109, yesterday's high in this at 109.56, and today you got to 109.54, because you have an outside day down, if you do it tomorrow, I think the market has a shot to get back to the 110.02 area. I'd be wrong in my thinking once it clears that if it took out yesterday's low of 108.95. Should be fun to watch. That's the way that I'm going to look at it. And there's more fun ahead for you. You know, you watch me each day. I have 5 indicators I follow. There's no big secrets about them. You might not know how to work with them. That's the secret. So I put together a course, 54 videos, 8 hours in length. And the idea there is I'm going to take you and start you off with a PowerPoint. And I'm going to make you watch the PowerPoint and do it yourself. Where does the line connect? What does this do, that do? Then we're through with that. Then we go to a real chart and we start looking for examples of what that PowerPoint showed for each one of the 5 indicators. We're not through, though. That's history. What do we do for today and tomorrow? Well, that's when you're getting into this, because when you take my course, you get my written recommendations and free access to my morning subscriber videos. It's another $60 value or so. Not through, though. Why? Because you're able to look at the charting software we give you with the indicators as they plot out with our values in them. And from there, how you're going to work it. I want to make this clear. You're going to be able to see it unfold each day. Now, you're liable to have questions. Well, you can always ask me those in our live webinars. I'm holding them now about every 2 weeks because I'm doing special reports in the week I don't do a webinar, which means I'm going to owe you one this week, a special report, and the week after we'll have that. But I'm unusual. I will take your phone call if you're a subscriber. I will talk to you. I'll do my best to explain it, and I'll even write you back in an email if that's what you'd prefer. Try to get that from other people to teach the way that I do. I do it. It's pretty quick. I've done this for many decades. So it's not new to me, and I know when you ask me the first part of your question, I'm already at the end of it because I've heard them before, and I'll be able to help you get where I think you have to go to understand what I'm doing. Does this mean that I walk on water? No. This is your framework to start. You need trading disciplines. You have to decide what is your goal in trading. You have to decide to measure dollar risk. You've got to learn what's a high percentage play, what is a bad percentage play. And you have to learn to be consistent and not, this is going to sound dangerous, not follow your instincts. They're going to be wrong. What's going to be right is your analysis of the chart if you do the same thing over and over, as long as, obviously, the teachings of it make sense, and you'll decide for yourself when you take the course. So, how much is it? $249.95. The charting software by itself for the time frame, you get it for a month, the charting software, $100. My research is $60. You're getting the other 54 videos, 8 hours for the price difference. If that doesn't make sense to you, what can I tell you? Go to our website. It's all explained there. I got a small video explaining it. It explains the course, how it works at www.iraepstein.com under what word? Education. I'll see you all tomorrow. Have a good evening. Take care.